You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Gold, crude oil, corn, soybeans, and more. With so many tradable products, the futures options market can be an intimidating place. How can you possibly keep track of the latest trading developments across so many different products? Don't worry, we've got you covered. Welcome to This Week in Futures Options, the program designed to help active futures options traders stay on top of this ever-changing marketplace. Each week, we'll break down the top trades, hot products, volatility explosions, and much more. So be sure to check out our live stream via the Mixlr app, or join our live chat room at mixlr.com/options-insider. Whether you're an experienced veteran or a newcomer looking to separate the wheat from the lean hogs, This Week in Futures Options has the information you can't find anywhere else. This Week in Futures Options is brought to you by QuickStrike, options pricing and analysis software. Learn more about QuickStrike at bantix.com. This Week in Futures Options is also brought to you by CME Group, the world's leading and most diverse futures and options exchange. Visit cmegroup.com/options. This Week in Futures Options is also brought to you by FTSE Russell, a leading global provider of benchmarks, analytics, and data solutions. For more information, please visit ftserussell.com. And now, get ready to break down the latest futures options trading activity. It's time for This Week in Futures Options.
All right, everybody, that music. You know what time it is. It's time for TWIFO. This Week in Futures Options, a program where the name says it all. We break down the week that was and indeed still is on the futures options side of the fence. Maybe we'll talk some ag, some rates, some who knows, equities, gold, metals. You never know. Lean hogs snuck on there recently. You never know what's going to sneak on to the program. If you got something you want to sneak in there on us, maybe try to throw us a fun curveball. We like those. Hit us up. You know where to find us at Options on most of the major social media platforms or on the old website. The feedback form has been revamped and brought front and center, easier for you guys to find now. I know it's kind of buried under the redesign. Brought it back front and center for you. You guys can just fill in the field and go out to your heart's content. Hitting us up with questions and comments. A lot of you have been doing just that. And, of course, you can always hit us up if you listen live as well via the old Mixlrs, MIXLR. My usual compatriots, my partners in crime. We just had Sean around last week. It was great doing a great deep dive into equities. He's been called away at the last minute yet again. You know, there are some things actually moving in the marketplace today. Go figure that the Russell guy has got to run. I understand. And, of course, our old friend Mr. Nick's kind of busy over there as well, running around hither and yon over there in the land of all things QuickStrike, keeping all these bells and whistles working behind the scenes here, which means we're going to dive into all these products. I will be your guide here on this journey today. By the way, you guys can play along the home game as always, cmegroup.com/TWIFO, TWIFO. That's where you find all these good reports that I'm going to break down. People ask all the time, how do you choose what goes on? Well, one of the ways we kick things off, we go on into that page, the market scan page there. It's a good one. I encourage you guys to use it as well. And we kind of profile coming into Thursday, late Wednesday. So what's really lighting it up? What's moving it out there over there on all the broad spectrum of products that trade over there at CME? And from there, we start analyzing what's going to make it onto the show that week. And looking here this week, one of our old friends, WTI, was having a bad week. So it seemed like it was definitely a contender to be on the show again here this week. Coming into late yesterday, it was off over 10%, putting it well into the bottom, close to the number one of the bottom five there in terms of worst on the week. Actually, iron ore was the worst on the week, off about 19%, but not a huge options story there. But WTI is of course a big option story and a big week for WTI. So I think we're going to start in energy land yet again. Yeah, it was down over 10% coming into Thursday. Now, of course, some things have happened. That number has evolved a little bit, but let's set the table. Let's set the scene here. It started off earlier this week on Tuesday. Of course, we had the trade war fears, and that kind of spooked everyone. In fact, a lot of people, even on my equity-oriented shows, were compelled to remark on just how much of the impact of this exacerbation of the trade war was felt in crude. It was one of the worst hit. You know, people always talk about soybeans and even domestic equities, but no, it was crude that took some of the worst drubbing after this trade war was rekindled earlier this week and late last week. That was followed hot on its heels, of course, on Tuesday, the EIA, the U.S. Energy Information Administration, cutting their oil demand outlook for 2019 down to 1 million barrels a day. They slashed it by 70,000 barrels a day. Ironically enough, they raised their 2020 forecast up by 30,000 barrels today. So it's still a net cut, but apparently they're foreseeing an end to this trade war and everything else much sooner, perhaps, than people like Goldman, who foresaw it going all the way through the 2020 elections and beyond. And, of course, we saw a surprise buildup in American U.S. stockpiles here. That's, of course, usually one of the big drivers of WTI is what's going on here on the U.S. supply front. And there have been a lot of drawdowns of late, and extreme drawdowns, and all of a sudden a surprise buildup in stockpiles. And that happened on Wednesday, and that, of course, was really the nail in the coffin there, driving the futures down as much, almost 6% just on that day alone. They closed 51.09. That was the lowest level since January 14th of this year. If you're wondering, that sell-off on Wednesday put WTI officially into bear market territory there for the year. And that was enough to awaken the sleeping Saudi bear over there. That sell-off was enough to spark something. So we don't know exactly what yet, but some talks of something coming out of OPEC to reverse this, because, of course, they were doing their cuts as a way to offset the sell-off to begin with, and now this sell-off has been exacerbated by so many interesting things going on abroad, the trade war being primary among them, and so the Saudis intimating that they're going to contact their fellow crude producers out there in OPEC and discuss some ways to mitigate this, to maybe they have to exacerbate their cuts. That's going to be a challenge because they're already cutting pretty deep. But the Saudis not liking these levels. And that wasn't enough. We have analysts coming out today saying that they could see crude taking a hit by as much as another $30. That's a lot, given where we already are coming into showtime at $52.15. But another $30. Granted, he's talking about Brent, but Brent isn't that far north anymore. The price differential between Brent, that WTI Brent spread, nowhere near perhaps as wide as it used to be. And looking at, he says $30. It could come off here. This is, of course, a Bank of America Merrill Lynch analyst here. So we take a bit of a dim view of analysts here on the network, but still interesting enough. So all that kind of weighing in. But it seems like the rumor of Saudi intervention was enough to give the futures a little bit of a lift. Again, we're at about 52.15 right now. Only off, I say only, in air quotes, listeners, only off a paltry 6.31% on the week. So mitigating that to over 10% sell-off at one point, but still, by no means was it a bullish week for crude. It was a bullish week for options flow out here, though. WTI just lighting it up. If you were probably wondering and thinking it's probably puts leading the dance this week, you are correct. If you said to yourself, I bet you the 50 puts were really doing a lot of volume this week, you were also correct. You're prescient. You're a Karnak of the WTI space because the 50 puts were on fire here this week. Let's kick them off with the number one trade with the bullet out here this week, of course, was the SEP 50 puts, doing nearly 60,000 contracts just in that one month and one strike. That's strong paper for WTI. Half of that, 33,000 coming on Wednesday. Of course, that makes sense. Wednesday was when we really were threatening the 50 handle there, and it seemed like the bottom had fallen out of crude. So 50 puts lighting it up, doing decent paper today, 5,700, 14,000 on Monday, and about 5,800 on Tuesday. Of that flow, I mean, the Wednesday's flow is now in, so we know the OI numbers, and is actually net closing on the week of looks like about 7,000 contracts. So people maybe had some protection on the 50 strike. They were taking it off. Maybe they were right in that strike thinking, hey, we're going to rebound off it aggressively. They decided discretion was the better part of valor. Either way, a decent amount of closing paper on that 50 put strike there in September. And this also kind of puts the lie to what we said before on this show many times, where people will clearly trade weekly and short duration products in crude. We were just talking about this with Adam on the show and Nick a few weeks ago. This SEP contract has 7 days to go. It is a weekly now, and yet it's lighting up the tape. 50.6% of all the flow this week came in this one contract with 7 days to go. So they will trade short duration, just not something that's listed as a weekly for whatever reason. You list a contract here with 7 days to go, no one's going to touch it. If you take a monthly and let it slowly drift and erode down to a weekly, they're going to eat it up. And so that's kind of the mystery of the WTI space. I've had many guests pontificate on this issue. I don't know if we were ever going to solve it, but the devil is clearly in the details there. But they will trade these, and let's keep on rolling. What else was lighting it up out here? Number two, a distant number two. Once you come out those 50 puts, that's really where all of the activity was this week. It falls off a cliff to number two here with 18,000. There were some calls trading. Number two actually with the double calls also in September, about almost 19,000 of those going up this week. The lion's share, surprise, surprise, on Wednesday, about 8,500 going up there. Then we fall off number three to 51 puts. So nice little juice. Those are pretty much at the money at one point there, 17,400 of those. And let's see here. Let's move out a little bit here because it was 50 puts were active kind of across the board out here in October. 50 puts doing nearly 10,000 contracts this week. If you go all the way out to Dees, it wasn't actually the 50 puts, even though they were pretty active. They did 6,700, but it was the 45 puts that were number one with a bullet, 10,000 of those going up. So it was pretty much all downside this week. Again, probably not a big surprise. And downside, pretty much 50 puts with a little bit of smattering, a sprinkling of 45 puts thrown in there for good measure. But it was all puts all the time. Let's look here again. You know, I'm hesitant to talk skew on a contract that has 7 days to go. If I were to do such a thing, which would be madness, but I could entertain it ever so briefly. The puts getting a little bit more bid. Go figure. They were 8.2% rich. They had the money this week. Coming into the show today at 10.7% rich. So again, puts leading the dance. That's not surprising. Calls staying roughly unched to where they were. So again, kind of reinforcing that not a lot of love for the calls here. Let's go out to Dees. Dees did, actually no, let's go out to October. That's got 40 days to go. And we've got a little bit more meat on that bone there, so we could sink our teeth into a little bit more. And it also did 20% of the paper this week, so it's not as irrelevant of a month and contract. Those puts getting more bid out there as well. 8.2% last week, 10.2%, so roughly similar, 2% increase there. The calls also getting crushed. Go figure this week. They were 6.7% cheap to the at the money. Remember, that little C means they're cheap. The big P means it's a premium. I know it's a little confusing, but once you've done it a few times, you get used to the nomenclature there. 8.6% cheap to the at the money this week, so even cheaper this week. So puts getting bid, calls getting offered. I think you could probably see that one coming out here, but either way, it's been just a maelstrom, a whirlwind of activity out here in WTI. We can keep talking this, but I think you guys have some listener questions about this a little bit later. So we will probably get to more WTI with your questions in a little bit. Let's keep on rolling to another product that was lighting it up. Actually having a good week coming into late yesterday when we start kind of parsing and planning for the show, and still having a good week. It was up there in the, not quite the number one of the top 10, but about 2 or 3. It was up about 5.25% coming into late yesterday, early this morning. This is, of course, gold. Again, another one that's not exactly surprising, given the fact that we've seen so much flight to quality this week. Even flight to crypto. Go figure that was quality, but apparently, at least for some, it is, particularly those who maybe have to expatriate some assets from areas where they're being devalued, let's say. But either way, gold looking good. Coming into showtime now, still up strong, up about 4% on the week. By the way, before we dive into some of the options nuggets, worth noting our buddy Blue there over at CME. And if you go to the homepage of CME, you can see Blue and Eric's stuff front and center. It's really, you don't have to dig at all. It's the homepage pretty much. And you'll see his newest research is about the intersection, the dance of rates and gold. It's called Gold's Ride Hinges on Rates. I think a lot of you who trade actively and watch the metals actively will probably agree with his assessment, or at least see where he's coming from. He kind of breaks down, it's been a bit of a topsy-turvy time out here in gold, and he's certainly correct. It rose to $13.50 an ounce back in April of last year, sunk below $1,200 by August, then rebounded up to $1,300 in March of this year. Remember, we were talking a lot on the show earlier this year about that 1,300 strike. That was where everyone was focused. And once we blew through it, everyone was focused on 1,400. Guess what? We hit that this summer, and we're kind of still north of 1,500, given this week's run, 1,510, as we're talking about him. And a lot of people, as he mentions in his report, a lot of people weigh in with different drivers of what really drives gold. Of course, Chinese demand is a big one. Production costs, portfolio diversification, all those things, including global tensions. But his analysis, and that's why I said I think a lot of you trade this will probably agree with this, his analysis shows that the one ring to rule them all when it comes to gold prices is indeed the Fed and domestic rates here. That's kind of the elephant in the room. He kind of charts the movements here and lines them up with some recent Fed announcements. He said after it rose to 13.5 in April of last year, the Fed, on the notion that the Fed was going to keep on raising rates, at least at that time last year, crushed. That's really was the catalyst that he feels crushed gold below 1,200 by August of that year. And then once they started maybe putting some chinks in that armor, maybe deciding or announcing or intimating that they weren't going to go on this path of successive increases, all of a sudden we saw gold moving back to 1,300, the signal of them being willing to cut rates again. That's what really shot gold up north of 1,400 an ounce. And he breaks down some other things here in the latter portion of the research. Again, I encourage you to read this with great charts and everything else we don't have time to get into here. But he kind of has some takeaways from this, that it is still gold is predominantly a rates-driven trade at this point. And he points out that if you're a gold bug, I know a lot of you out there are, we're at 1,500. If you want to see it hit the next level, hit 1,600, it's going to take arguably a few cuts from the Fed at this point. He also points out that the global trade war still an issue, but it's all through the lens of how that impacts domestic rate cuts. If the trade war leads to a more aggressive rate cut schedule from the Fed, then gold will benefit from it. If not, not so much. It also, as he points out, maybe kind of puts the lie a little bit to this belief that gold is this great portfolio diversification tool. At least right now, not so much if it's totally driven by kind of the domestic rates picture. So a lot to check out. Again, I encourage you, read it for yourself. Look at all the charts, all the data. It goes on for many pages. Gold's Ride Hinges on Rates from our buddy over there, Mr. Blue Putnam over there. Again, coming into showtime, 15.10, up, about almost 60 handles, 59.1. That puts it up 4.07%. Still strong, still up there, close to the top 5, if not breaking through it here this week out here. And let's see what was dominating the tape. Let's look at open interest first. Up strong, up 6, almost 6.5%. That's a big gain for OI for gold options. The number one with a bullet out here, SEP, yet again, 30.9% of the volume was in that contract. It's got 19 days to go out here. And the big trade, again, gold bugs, kind of like their even numbers, kind of like the WTI folks do as well. Equities certainly can fall into that category as well. Round numbers are where they like to hang their hats, and that's what we saw. 1,500, go figure, we break through it. Everyone's trading it. 1,500 was the bell of the ball this week. 25,000 of the SEP 1,500s was leading the tape this week. 25,000 pretty much even. That's interesting. The lion's share coming, again, Wednesday. That was the big down day, the big flight to quality day, and also then the reversal Either way, almost 9,000 hitting the tape that day alone. Worth noting, of that 25,000, well, there's about 6,000 hitting the tape today, so we don't know all of it, obviously. But of the volume that went up, a good, at least almost 2/3 of it going up coming into today, 2,200 closing net. So a little bit of closing. People had some upside specs. Maybe they were short that strike. Even though knowing the nature of gold flow, I don't think so. I think they were long it and they were taking it off when we broke through that level. Let's see here. Number 2. Right behind it were 1,500 calls was kind of the order of the day. You pick a month, and it was 1,500s. Same deal out there in October. 1,500 calls doing about 12,000 out there. Let's parse a little bit. Sometimes you like to dig a little bit too here. 15 quarters also doing pretty decent paper here in September. Almost 10,000 of those. The lion's share actually opening. So maybe some of that 1,500 closing paper was rolling up to the 15 quarters. Again, people like their bullish upside flow in gold. And closing on 1,500s, I could see people reopening there at the 15 quarters. And let's roll out a little bit. If that's not bullish, if that's not optimistic enough for you listeners, well then indeed 1,600s were all the rage, 7,681 of those bad boys. And you go out to looks like February of next year here. And we've got, this is April actually. This is April of next year. And we've got the 1,700s lighting it up 6,100 times as well. So if you're bullish, yeah, someone else is more bullish out here. Also worth noting, in June of next year, 4,500, the 1,600s lighting up. Pretty much all calls all the time. And for the most optimistic paper of the week, that's got to go to these 1,800s in Dece of 2020, lighting up the tape 1,200 times. And that was opening. So actually, no, that's today. So we don't know exactly if that's opening, but a good chance that it probably is, in which case that gets, again, there could be overwriting, but not a lot of juice in those. So probably a bit of some upside love there. If past is prologue in gold, that's exactly what we're seeing. Let's do a little bit of skew analysis. I guess we'll go to SEP. It's got the lion's share, even though it's got a couple of weeks to go, so it's a little bit better than what we saw there in WTI. The puts getting cheaper, calls getting richer. I don't think anyone is too surprised by that, but maybe the degree of it, the nature of it may surprise you. The puts were 8.6% cheap at the money this week. They're 12.2, coming in nearly 4 points, and the same going for the upside, but exacerbated in terms of just sheer magnitude are the calls, or all the love to the calls this week. They were about 10.8% rich at the money last week. This week, 16.8%, so nearly a full 6 points on this one this week. So those calls, again, that's one of the reasons why we like talking gold. The skew is evolving. It's always changing. It's always moving. Lately, the dance has been to the upside. The bid has been to the upside, and we're seeing that pretty firmly here again this week. Let's go quickly out to Dece and see if it's the same deal. Yeah, it is the same deal. Obviously, the bid to the call's not going to be as extreme the change because it's not a 2-week contract. The Dece has 100-odd days to go, so a little bit more rational heads out there. The put's still getting about 2% cheaper this week, though. It went from 10.3% to 12.6%. The calls, they were 18.3% rich to at the money this week. They are 19.9%, so about 1.6 points richer out there. So same move, not quite as extreme, but again, that's what you're going to see in a contract that has a little bit more time on its horizon. My good buddy Uncle Mike, he'd get mad at me if I didn't at least touch on his favorite as well before we roll out of the metals, because silver had another rock'em sock'em. In fact, right now, coming to showtime, it is exceeding gold to the upside, up nearly 5%, 4.9%, or 17.05 right now. Enough that even Uncle Mike is doing stuff out there in his silver collars. Check out the option block, especially from Monday of this week, where he talks about some of the stuff that he was doing. Let's see, open interest also up over 5%, so that's a good, robust week for silver as well. Again, the volume a little bit lighter in silver from an options perspective, but comparatively, a very strong week. And if you're saying to yourself, what was lighting it up out here this week? I'm going to guess it was upside, maybe 17s. That's a very, very good guess. You get the number 2 spot. The 17 calls in September doing 2,500, but that was not number 1 with a bullet this week, listeners. It was, in fact, there's a lot of 20s trading across the board out here in November, in December. December actually is our number one with a bullet trade, 3,067 of the December 20 calls. They traded it pretty actively all week, and opening OI, pretty much all of it, 1,100 today, 1,100 yesterday, for about almost 500 on Monday, and about 300 on Tuesday. Again, opening for pretty much all of that. Opening upside on the 20 strike was the order of the day here in silver, which is interesting. The 18s following hot on its heels. They weren't quite number 2, though. That was the 17s in September. But the 18s in Dece, a distant number, or I should say a close number 3, 2,400, so 100-odd contracts different, with about lion's share of that 2,400 coming on Wednesday. So upside, pretty sizable upside call. When's the last time we saw silver threaten 20? It's been some time, listeners, so the fact that all this paper is lining up out there, it's kind of, we actually saw 1,000 of the 21s trading also in March of next year. So strong upside trading out here, at least action to the calls here. Let's take a look at the skew. I'm going to go out on a limb and say it's probably pretty similar to what we saw out here in gold. But then again, you never know. Silver is its own beast. 32% of that going in the SEP contract. Let's go out to Dece. I like a little bit saner. You know, if you go out to Dece, the skew is actually unched, which is surprising. We saw 8.6% cheap to the money for the puts, same exactly this week. 14.3% rich to the calls, and they're actually 14 points actually came in fractionally. That is not what I expected. Let's go to the more ready to go here contract, the one that has a mere 19 days left. This is the SEP contract. The puts getting a little bit richer. They were 9.9% cheap at the money. Now they're 8.7%. And the calls actually coming in. They were 15.4% risk at the money this week, 11, down nearly 4 points. So that's a surprise. Maybe the fact that we broke through that 17 strike. So many people are taking some stuff off that the calls are actually coming in. That's a bit of a weird one. I thought maybe it would, given the strength of this move, that we'd see something similar to what we saw in gold. People scrambling to pile in. Again, the silver bug effect is not as strong as it is in gold, but still, that's an interesting development. Silver skew actually coming in this week. Uncle Mike, I think, will be surprised and or pleased to hear that. Speaking of pleased, I'm sure Mr. Sean out there is pleased with what he's seeing in the land of the Russell 2000. By the way, of course, you guys, as always, play along, cmegroup.com/TWIFO. If you do that, go on to the drop down there, top left corner of the page, choose equity indices, then the U.S. indexes, E-minis, then go on down to the Russell 2000. That's where we're hanging our hat right now. You'll see it was a decently active week out there. Coming into the showtime, first off, 1531 is where we are right now, off about 0.25%. That has mitigated a lot of the losses for the week. Russell was actually down quite a bit. Russell's been a weird bird to watch over the past year. Kind of play into the beat of its own drummer a little bit, and continuing some of that here this week, but mitigating the worst of the losses, only off 0.25% now on the week. 1530 is about our at-the-money strike here, and it was 1390 puts leading the dance out here in September. That's kind of interesting. That's the number one trade. Actually, I take that back ever so slightly. By 4 contracts, it was the 1540 calls that actually led the dance. These were out here in August, so these are pretty much weeklies. Again, weeklies are where most of the action is in most of the equity products, and Russell, not disappointing on that front, but they're pretty much tied neck and neck with these pretty far out of the money. 1390 puts here. These are 140 handles out of the money, so interesting to see all of that. The skew, let's see, the puts they were 15.6% bid to the at the money out here in, again, this is in the AUG contract. This is a weekly, so take all this with a grain of salt. And then they were 12.5% rich, so that bid to the puts kind of going away. Not surprising, given that we saw the worst of those losses mitigated, and the calls actually coming in aggressively, which again, we're rallying north a little bit, so people taking those calls off the table. 12.4% cheap at the money this week now. They are 13.9% cheap, so having come in a little bit. So puts bid, calls coming in. It's kind of a standard equity skew development when the index is, it's off on the week, but has rallied a bit from those lows out here. Let's look at really quickly. We like to break down our vol spreads out here. Coming into showtime, VIX is at about a 1760. We saw our old friend, a.k.a. the volatility, a.k.a. VVIX, was flirting with that triple-digit level, just back down from 100. It was about 99 and change. So remember, that's one we tell you to watch. That's a great indicator. If you don't watch much in the equity space, the volatility of volatility is certainly one to go. And we have always said, we said it again a couple weeks ago on our Volatility Views show, when it starts threatening that 70 handle, and it got very close. It got down into the low 80s again. We said, this is the time you might want to start watching this again, because volatility starts moving. It doesn't hang at or around that 70 handle for very long. And sure enough, I don't think anyone expected the degree to which it moved, but it did move, and it got way away from the 70 handle, got up to 114 or so. So, yeah, big move in the volatility of volatility. Saw similar moves in RVX. That was at 20.6. That's up a point from last week. By the way, VIX, ironically, unched from where it was last week. Remember, last week we had just come off the announcement of the exacerbation of the trade war, so vol was skyrocketing. And we're pretty much right back to where we were from a vol perspective. So after a week, unched on VIX, up a point from RVX. That means that spread, go figure, widening out up to about 3 points from where it was last week, which was about 2 points. So RVX still leading the dance and doing it by a pretty wide margin. Again, not surprising given some of the interesting and aberrant paper we've been seeing and the aberrant movement we've been seeing out there in RVX. If you like earnings, that has been driving a lot out here of late. In particular, these micro E-minis. They continue to be the story, the belle of the ball out here. These things are just trading it up. You guys clearly like them, and you want to trade them. Over 5 days now, 5 consecutive days, CME just put out this morning, over 1 million contracts, reaching a record high of 1.4 million contracts. That was back, that's today, August 8th, actually. So they're already getting ahead of themselves with records already for today. But yeah, that's a lot of paper, a lot of it, again, driven by earnings. If you're curious, it seems like it just yesterday. It's only been 3 months since these things launched, and they've traded over 32 million contracts. Again, these are micros, so take that overall number with a bit of a grain of salt. It's a much smaller contract, obviously, but still, no matter how you cut it, 32 million is a heck of a lot of freaking contracts. Clearly, you guys like this. Worth noting, 26% of that volume coming from outside the U.S. That's interesting. I would not have expected that. So you guys clearly like yourselves some micros, because that's where all of the action is these days. All right, you guys have some product requests here, so I think we'll get on to some of your ideas with a little bit of your futures options feedback.
It's time for your questions, comments, and insights. It's time for Futures Options Feedback. Submit your questions at twitter.com/options, facebook.com/The Options Insider, stocktwits.com/Options Insider, or via questions at theoptionsinsider.com. You can also submit your feedback via our Options Insider Radio Network mobile app, available for iOS, Android, and Kindle Fire devices. You can even ask your questions live every Friday at 3 p.m. Central via our Mixlr chat room. So grab the Mixlr app or just search for Options Insider at Mixlr.com. That's MIXLR.com.
All right, ladies and gents, your turn. You get to dictate what we talk about here on the show. Let's see what you guys have on the brain first. All right, here we've got I love these handles. STI6RY. Let's just read it that way. STI6RY wants to know, big move in iron ore this week off the trade war. Is there much options action out there? I kind of touched on that at the top of the show. And you're right, iron ore was getting obliterated. And in fact, when we look at our scans for the show, you guys can do that yourself, of course. If you're in the quick strike, go to the quick reports and then click on the market scans. And then just set the week, 1 week back. And you can see, again, that's all futures. It's not OI, it's not vol, nothing like that. It's just straight up futures movement. And you can see what's lighting it up. And if you did that coming into the show this morning or late last night, you would have seen iron ore was just obliterated off. It was number one with a bullet by far to the downside. Kind of a dubious distinction, not an honor you really want. It was off almost 19, I think maybe a little over 19%. So just annihilated. Coming into the show right now, we've seen a lot of that loss has been mitigated. Right now, it's off a mere 8.5%. That's still a big sell-off, but not quite the annihilation that you might have expected. If you're wondering where iron ore is trading right now, it's 97.37. So that front contract out there that has about 3 weeks to go. So interesting out there. Now, this is unfortunately where that interesting part ends, because you're right. We would love to talk about a product like this. Unfortunately, that's kind of it. That there's no, with this huge swing we saw this week, there's literally no options action at all this week. Nothing traded. It's not really an options name. That said, there is some open interest, about 1,785 contracts open. I don't know when it was opened. It certainly was not this week. And it looks like it's pretty equal, 565 in October and November. So maybe a bit of a spread there. Actually, 565 also in Dece. So bit of a three-legged calendar open out there with a couple of paltry ones in the front couple of months. So, but such equal paper can't be an accident. But that's it. That's all that's open in iron ore. So these huge swings, these huge fluctuations in the underlying. I wish there was a huge option story to talk. There's reasons sometimes, listeners, that names don't come up on our radar. And that's, iron ore, you're right. It's been moving a lot. Week after week is topping the scans to the downside. And yet there's literally nothing to parse this week. There's no options paper. So unfortunately, I wish there was more. And by the way, if you're playing around with it, there's 3 actual different products there to look at in the report. Only one of them, obviously, it's the ICT that has any options expirations to analyze. So start there, and that's pretty much all there is. I wish I had more for you, Mr. or Mrs. STI6RY, but unfortunately, that's it. Jack wants to know, what about a weekly skew report on TWIFO? Maybe the biggest changers from week to week. Yes, I like that idea. In fact, that's an idea I have broached with Mr. Nick in the past. Unfortunately, his team is busy. They're building other features. They're working on, updating things like the Fed Watch and everything. So we don't always have the time, or they don't always have the bandwidth to crank out the laundry list of awesome reports that I would love to have for you guys week in, week out. Trust me, I've suggested that. And, that's also a bit of a challenge as well. And how do you construct that? Is it just biggest percentage changers, calls and puts? Because then you're going to have always contracts pretty much that are in the weeklies that are dominating it, right? Because the skew is going to move all over the place. So maybe you have to, put some layers of filtration in there too. It's not as simple as it seems, Jack, to just have this. Here's the most. You could do that. I don't know if that information that report spits back at you is going to be of the most value. So you have to kind of parse a little bit. Maybe you have to filter for, maybe contracts that go beyond a little bit in the weeklies, but then you're missing some other stuff. So maybe you have to work in, if they're in the weeklies, do they have a certain percentage of the actual volume, which makes them relevant? There's a lot of subjective filters you may have to apply to that to make that report. You're right. But you're right. That would be cool. You can find some of that stuff yourself if you play around. And again, next time Nick's on, I'll have him kind of walk you through how to do that kind of a little bit more easily. You can do that somewhat in the quick strike right now, but it takes a little bit of effort. I would like to make it a little bit more surface for you guys. So we are working on something like that. But again, those are some of the questions we're wrestling. If you have suggestions for what are some of the better ways to construct said report, how you would like to see a skew report, if you just want the biggest changers, we could do that. I don't know if that's the most informative, but we could do that. That might be an interesting little nugget to have on for you. N Media wants to know, what's up with the beans? Is there much on with the beans this week? And actually no. It used to be that the beans were kind of ground zero. I've said it many times here on this show. The beans were ground zero for the trade war. That's kind of where the heat was. And we saw that exacerbated with the trade war this week, when China instructing all of their government companies to have no more acquisitions of U.S. agriculture products for the foreseeable future. So that did come out this week, and yet we didn't see a correlating big move on the beans. In fact, if you look at our scans here for the week, you got to go pretty far down to find the beans on the list. They're pretty much, soybean oil is literally at the bottom of the top 10. It's up a paltry 0.5%, so not really a big mover there. The beans themselves were about number 15 or so on the dark side, off about 1.7%. And now here, coming into showtime, they have rallied a little bit. They're up about 1.8%. That scan was done late yesterday, so they've moved a little bit since then. But yeah, not a ton of paper out here. Maybe some people feel that beans trade, we've kind of seen the ramifications of that. A lot of the farmers have had to shift away from beans because China is buying literally none of them. And if they are, they're buying them from Brazil. So, and of course, on top of all the issues with planting and water that we've seen here in the U.S. of late. So, yeah, it's not exactly the big trader that it was when the trade war first really kicked off here. I mean, we're up net 1.8% on the week. That's 15 handles. Not bad. 871.25 if you're curious where the front beans contract is right now. So we're still shy of that 900 level. A lot of people were watching this week. OI up about 2% from a volume perspective. 42% of that paper coming in that SEP contract with about 2 weeks to go. 920 calls were the biggest trader, 7,900. So decent, but for the beans, that's not a lot really at all. And so it was a surprisingly quiet week on the beans front, despite the fact that they were kind of mentioned in that trade war. But again, if you watch the beans, maybe a lot of that already kind of baked in here this week. Not a lot of huge amount of upside move of these contracts 2 weeks to go. The puts moving a little bit. They were 2% cheap at the money last week. This week, they're about 0.7%. So coming in about a point, getting bid a little bit by a point, getting a little bit richer. And the calls went from 3.8% rich to 2.8% rich this week. So calls actually coming in a little bit. Puts getting a little bit bid. Not surprising. Maybe when we were facing a little bit more downside this week, now that we're rallying a little bit, that's still kind of surprising. But it's not exactly, it's hard to read too much into this light amount of paper flow. So all that, a long way around to saying Mr. Who was that? Mr. N Media or Mrs. Not a lot on with the bean. That's why they weren't in. That's why they weren't in our run. That stuff happens for a reason sometimes, listeners. All right. Els wants to know, any more firmness to the WTI skew this week? We kind of just went through that earlier. No. The answer, unfortunately, or I guess maybe fortunately, depending on your perspective, is no. That's one of the ongoing sagas, the ongoing stories of WTI. We talked about it with Adam, the market maker, out there a couple of weeks ago. Any chance there's a pop, they take that as an opportunity to unload all the calls they can, which is why that skew to the upside remains weak. And I don't think in a week when we're selling off almost 10%, that we're going to see a lot of firmness to that call skew. Obviously, it rallied a little bit in the last 24 hours, so some of that mitigated a bit. But this is not the week for the call skew to get bid, and we talked about it earlier. That was pretty much not what was happening. We could do we'll tell you what, we'll do another real quick check-in on that just to see for sure. We talked about some nearer-term ones. Let's go a little bit farther out to see what is going. We talked about the other strike that month before. The call is getting a little bit bid this week. Actually, no, we talked about it before, and actually in that contract was 7 days ago. And again, that's so weekly, so take all this with a grain of salt. But the calls actually got cheaper to the money by 1.2%. So that kind of wasn't a surprise. Let's go out to Dees a little bit farther out and see exactly how that was. The puts were 7.1% rich to the money this week, 10.3. So getting a full 3 points. Again, not a surprise. We were testing lows. We went into official bear market territory, so the put's going to get some love. The calls were 5.3% cheap at the money this week. They are 8.6% cheap. That's in Dees. That's a more level-headed contract, shall we say. So, yeah, no love this week. Again, we sold off. We went into bear market. We rallied recently, but not exactly the week to get some call love here in W. So if you were waiting, you thought this was going to be the week that the worm turned and all of these macroeconomic concerns that are clearly reflected in that upside call skew, that those were going to magically go away. Unfortunately, this was not the week for that. All right, let's take it home with this one. Little Big wants to know, what's your most memorable thing you've learned from doing this show? You guys ask such deep. You ask such deep and thought-provoking questions, listeners. The most memorable thing I've learned from doing the show, I think it has to go back to what we were just talking about, the skew and just the volatile nature of some of the skews of these commodity products that we profile here week after week. That's why I love doing this show, quite frankly. I mean, I love the equities. We talk equities all the time. We talk indexes. We love all of those. But the skew there is kind of a known beast. It's gonna vary by degree, but not really by shape, unless something really crazy is going on, or unless you're talking maybe a biotech before an FDA announcement or something along those lines. That's really kind of where you see maybe Apple back in the go-go days when it was threatening 700 and everyone had to buy all the calls going into earnings. Outside of aberrant scenarios like that, earnings or FDA announcements, things like that, you're not really going to see a lot of changes to those skew or changes in shape, certainly. So that's kind of the most memorable. I mean, most memorable trade was certainly all those funky ratios we saw last year and again this year in the upside in gold. Those are the ones that gold bug really sticks in my mind from that. So I guess memorable, you can parse it a lot of different ways. Those are my probably most memorable trades. The most memorable thing is just in general the ongoing evolution of the skew, and it's across products. The ags differ from the metals, differ from the energies, differ, of course, from the equities. And then you get into some of these more esoteric things like lean hogs and iron ore, which has no skew right now at all because nothing's trading. So it really just evolves from product to product. And that's what I think makes this show and it makes this category so fascinating, is that if you're bored of one or tired of one, or you think something you kind of have a handle on it, another product's going to be right along there to change the game and surprise you, and maybe in ways that you hadn't anticipated before. All right, everybody. That music, unfortunately, means we've come to the end of this very fun. Sometimes I like these solo shows. I get to crank through some products. I get to crank through a lot of your questions, too, and you guys have more products on the brain. So we hit a lot of products, which is always fun. Love the guests, too. Don't get me wrong. They're all fun, but some of these deep into product shows are always fun, too. Keep those questions coming. You obviously know how to find us. Add options on most of the major platforms, in the live chat during the show, or indeed questions at the options inside another one you guys like to use, or go to the website. It's all there on the feedback form as well. Let's go back really quickly. If you want to, of course, learn more about what's going on in the land of FTSE, their post-recon, they're setting up for new things. If you want to suggest new products, I know Sean will listen. So go ahead and hit them up over there. They're at FTSE Russell on Twitter, or indeed over there at FTSERussell.com. And if you are, he's given it out before, so I'll do it for him again. If you want to hit him up with some questions or some personal product recommendations, he actually will take your emails. He's a nice guy. Sean Smith, Smith at FTSERussell.com is the place to send those ideas, those product suggestions. All you asking about, the RVX options and things, hit him up. Let him know. He wants to hear that kind of stuff. And, of course, for Mr. Nick and all of his crew over there, cmegroup.com/TWIFO is the place to go to try it. And then if you want to upgrade to the high-end version, then you go to bantix.com, BANTIX.com. Kick the tires and light the fires. Nick will love to see it. You can ask him questions. I joke that he's a beloved curmudgeon, but he'll answer your stuff. So if you have questions, he'll be happy to walk you through how to use all that stuff as well. And of course, for Eric and Blue and all of our buddies over there at CME, you can easily, where to find them. CMEgroup.com is the place to go. And on behalf of all my buddies and friends and cohorts who've been on the show with me recently, and indeed you guys are hitting us up with great questions. Keep those coming. We love to hear from you. And we'll see you back here tomorrow for Volatility Views. And then Monday it all kicks off again with Option Block, and we'll be back again next Thursday with more of This Week in Futures Options.
This Week in Futures Options is brought to you by QuickStrike, options pricing and analysis software. QuickStrike offers powerful and flexible options analysis and pricing tools via an easy-to-use web-based interface. View prices on outright options or spreads with comprehensive page-level analysis controls. Build trades, manage risk, or explore historical volatility. QuickStrike has you covered, with market data reports ranging from open interest to the term structure of volatility. QuickStrike is the perfect addition to your trading toolkit. Learn more about QuickStrike at bantix.com. That's VANTIX.com. And don't forget to follow us on Twitter at QuickStrike1. That's QUIKSTRIKE1. This Week in Futures Options is also brought to you by CME Group, the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world manage risks and seize opportunities. CME Group offers the deepest and most liquid options on futures across all asset classes, including interest rates, equity indexes, foreign exchange, energy, agriculture, and metals. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This Week in Futures Options is also brought to you by FTSE Russell, a leading global provider of benchmarks, analytics, and data solutions. Investors in the U.S. and around the world are using FTSE Russell indexes to benchmark their investment performance and create investment funds, ETFs, structured products, and index-based derivatives. Many Options Insider Radio Network listeners will be familiar with the Russell 2000 Index. Russell 2000 futures and options are currently trading on the Chicago Board Options Exchange and CME Group. For more information, please visit ftserussell.com, cboe.com, and cmegroup.com. This broadcast is intended for informational and educational purposes only and does not constitute trading advice or the solicitation of purchases or sale of any futures or options. The rulebook of the applicable exchange should be consulted as the authoritative source on all current contract specifications. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.